Hey guys, it's Dimitri. Today I'm going to walk you through my exact TradingView setup and how I use it to swing trade options the right way. I'll show you my StockScanner or screener, as well as my private indicator, and then we'll go over how to actually choose the right option strike when a stock is breaking out, because most traders get this completely wrong. So let's jump into it. So this is my exact TradingView layout. I have absolutely nothing to hide from you guys. So first I use a custom stock screener or scanner, whatever you want to call it. Basically, what my scanner is doing is filtering out stocks that are actually worth trading. So there's basically none of that gambling stuff, and it's actually only stocks that are performing well. And trust me guys, this will save you both a lot of time and a lot of money. Alright, so when you open TradingView and you go to Super Charts, the stock screener is located on the bottom left, right here. So once you open it, you can see that right here I have 5 filters, and that basically there's about 300 stocks that matches those filters. So what I do with this scanner is basically that I go through every single stock that's in it to be able to identify patterns or setups that I think are promising. I do this maybe 2 or 3 times a week. It might sound long to do this because there's about 300 stocks right now in the scanner, and sometimes it even goes up to about 400, but trust me, it's a lot faster than if you look at the 7,000 or so stocks in the entire stock market. Stocks that I look for in this scanner are basically stocks that are in consolidation period, and we can see that right here. I added this one to my watch list. So if we take a look at this one, I added it to my watch list because basically it's almost exactly what we've seen in the first video. So we look for stocks that are making a strong move up. This one right here at its peak was about 1500%. So basically after that we wait for consolidation. As we can see between my trend lines, this stock is making higher lows and lower highs, and it is exactly why I added this stock to my watch list. So this is basically what the scanner is doing for me, and I think it's saving me a lot of time when I look for stocks in the market. Alright, so if we go to our scanner settings, we can see that there's only 5 filters. I'll leave you guys time to screenshot this. These are basically filtering out stocks that have made at least a 30% move in the past 3 months, and it has somewhat a high volume, so at least 1 million. Alright, so now that you guys know my scanner settings, I'll show you my exact indicator. Alright, so this is my private indicator. It's invite only, so if you want access to it, I'll link it in the description. Basically, this indicator is extremely simple. It's focused on swing trading. So this is a mix of the 10, 20, 50, and 200 SMA, which is simple moving average. It also has ADR percentage and ATR, which basically tells you how much a stock is moving. So this baby AI stock right here is moving about 11% per day, which represent a $1.08 move. And lastly, we have the volume, so we can see how much percent are actually trading the stock. Yeah, so as I said guys, it's an extremely simple indicator, but in my opinion, this is all you need when it comes to swing trading. So next I'll show you my chart settings. So normally these candles are red and green, but as you can see, I've made them black and white. First of all, I think it looks great and it looks simple, but the main reason behind that was to help me control my emotions when I started trading, because at first when I saw big red candles, for example, I tended to be scared and not follow my strategy. So sometimes I would sell earlier because I wanted to cut my losses short, and it was the same thing when it was big green candles. So sometimes I would be greedy and not sell where my target was because I wanted more gains. So this is basically what led me to choose these color settings, and honestly I think it works great and it's nice. I mean, it looks nice. I'm used to it now. So I'll show you the settings. To be able to access your settings, you right click on the chart and you scroll down here to settings. Once you open this, you'll see that these are your candle colors. So mine are exactly like this. I'll leave it there for a second so you can copy it. So next is status line. These are symbols, indicators, titles, whatever. I don't think I've made any changes in this at all. Scales and lines. These are my settings. Pre and post market are the most important in my opinion. Canvas, I'm honestly not sure what it does. Trading, so buy and sell buttons. Honestly, I can take this off since I don't trade on TradingView. My alert settings are this. I think this is the basics, and same thing goes for the events. So these TradingView settings have saved me a lot of time, especially the scanner and indicator, especially because it's helping me spot trade fast without getting caught up in noise. Now that we have our setup ready, Let's talk about actually choosing the right options contract, because most people do this completely wrong. A lot of traders just go for the cheapest out-of-money contracts thinking they'll make crazy returns, but here's why that's usually a mistake. Your contract's expiration should match the breakout setup. If it's a short-term move, you don't want to pick a contract that expires in 3 months. But if it's a bigger breakout, you don't want something that expires in 3 days. Think of it like this. Your strike price and expiration should match the stock expecting move. Don't just buy random contracts. Let me show you how I applied this on a recent trade so you can see it in action. Alright, so this happened about 2 weeks ago. This stock, which is PLTR, broke out of its range because of its earnings. Yeah, so basically the stock gapped around 20% higher overnight. So when the market opened, the stock went down a bit and it went back higher to take the high of the day. So this is when I entered, when it took the high of the day at that moment. The stock was around 103 and I decided to enter calls because the shares price was high, so the potential return on the options was much higher than it would have been on the shares. This breakout was on a Tuesday, which basically tells us that the closest contract expirations are basically in 3 days, which is Wednesday, Thursday, and Friday. So I took contract that expired Friday because I believed that the move wouldn't be much longer. And what I did to calculate my strike price was basically I looked at my ADR right here, which is 5.35%. I went at 5% flat to be a bit conservative, and my entry price was at 103 with 3 days left until expiration. So I went on the calculator, I put 103, which was my entry price, times 5% times 3, which is 15%, so 1.15. And it gave me 118.45. The strike price were divided by 5, so I went lower. You should never go higher in my opinion. So I went lower, I went at 115. Yeah, so I entered right here, strike price at 115, expiring in 3 days. As you can see, if we go until Friday, you can see that our strike price was hit and that our calls would have been in the money. So what would have been a 12% move on shares in 3 days resulted in about a 300 or 400% move in options. So as you can see, this is how we calculate the strike price and expiration. Obviously, options are much more riskier than shares in my opinion, because they don't just revolve around the stock price, but there also is other variables that are included. But anyway, this is how you need to calculate the option strike price to be able to get the maximum results. As you can imagine, if you've been following my journey for quite some time now, I prefer to trade shares over options, and there is one good reason behind that. I could make an entirely different video about this subject, so let me know if you guys would be interested in that. If not, I already explained why in a trade format on my Twitter or X, which will be linked down in the description. So basically, if we do a small recap of what you need to calculate the right strike price. So first you need to choose your expiration, depending on the options available, depending on the size of the move, and of course depending on the day of the week that you enter the trade. Once you have your expiration, you need your ADR percentage. So you need to calculate the ADR percentage by the number of days before your contract expires. And you also never count the first day. So if you enter on Monday, then your expiration is in 4 days, not 5. So I hope this video will help you guys. Of course, if you want access to my private indicator, it's linked in the description. And I would also like to hear how do you personally choose your option strike. As always, I post daily insight on Twitter or X. So if you're not following me there, make sure to check it out. And if you found this helpful, make sure you like, subscribe, and let me know in the comment what video you want next.